Brad Williams, Frugal Finance, managing finances as a single parent. Being a single parent presents unique challenges, especially when it comes to managing finances. While many financial hurdles are similar to those faced by two-parent households, single parents bear the full responsibility, which intensifies the need for careful planning. Without the support of a second income, the importance of creating a solid financial strategy becomes even more important. This video outlines essential steps for single parents to take control of their financial well-being. The key financial needs of single parents. Single parents, just like two-parent households, need to have certain financial elements in place. A strong cash flow plan, a realistic and comprehensive budget, an emergency or contingency fund, health insurance coverage, life, disability, auto, and property insurance, a legally sound will with guardianship provisions and potentially a trust. While the principles of financial planning remain the same, the stakes are significantly higher for single parents. You are your own safety net, so it's crucial to take these steps seriously. How single parenthood happens? Single parenthood can occur for various reasons. The death of a spouse or a partner, the divorce or a breakup, a deliberate choice to become a single parent either through adoption or by conceiving and planning to raise a child alone. Historically, single parenthood was often considered a women's issue. However, this has changed, with more men now taking on the role of custodial parent after divorce and even adopting on their own. For those who choose single parenthood, there is a time to plan and prepare. In contrast, for those who transition from two-parenthood household to a single parenthood due to death or divorce, the shift is more abrupt. Regardless of the situation, the financial planning needs remain the same, but the circumstances may add additional layers of complexity. The hidden costs of single parenthood. As a newly single parent, you may find that many costs you once shared with your partner now fall solely on you. Here are a few examples of those hidden costs. Child care and household help. When both parents were involved, chores like cleaning or yard work were divided. Now you may need to hire help, such as a cleaning service or a gardener. To maintain the house, these costs should be anticipated and factored into your budget. Extended daycare or after-school care. Previously, you and your partner may have split the responsibilities of picking up children from school or daycare. Now, you may need to adjust your child's schedule to extend daycare hours or hire additional babysitters, which can be an extra expense. Income challenges. As a single parent, it can be difficult to work extra hours or take on overtime due to your child care responsibilities. Even if you do manage to earn extra money, it may be consumed by the high cost of child care, making the extra income less beneficial than expected. Sick days and vacation. With only one caregiver, you might face challenges when a child falls ill. You may not have enough paid time off to cover these unexpected situations. Furthermore, the idea of taking a vacation may seem impossible without help or extra funds. Balancing your needs and your children's needs. In your role as a sole caregiver, it's tempting to focus entirely on your children's well-being and forego your own needs. However, it's essential to maintain a balance. Cutting contributions to your retirement fund or abandoning your own personal goals might give you immediate relief, but in the long run, it could harm both you and your children. Taking care of yourself through maintaining friendships, taking breaks, or engaging in hobbies helps reduce stress, which benefits your children. Avoid overcompensating with gifts or material goods in an attempt to make up for the changes in your family structure, as this could strain your budget unnecessarily. Sources of income for single parents. Your income as a single parent might come from various sources. Here are a few potential revenue streams to consider. Personal income. You can adjust your withholding and tax filing status. In the case of divorce or the death of a spouse, you may qualify for tax breaks that could increase your take-home pay. Additional jobs or freelancing, depending on your schedule and the availability of childcare. Taking on a second job or freelance work could help bring in extra money. However, it's important to assess the cost of childcare and how they will impact your overall financial picture. Life insurance. In the unfortunate event of a spouse's death, life insurance proceeds can be a valuable financial resource. Deciding whether to pay off debts or invest these funds requires careful consideration of the long-term impact on your finances. Social Security and benefits. Widows and widowers may qualify for Social Security benefits for themselves or their children. These benefits have specific eligibility criteria and expiration dates, so it's important to be aware of how they work and plan accordingly. Alimony and child support. For divorced parents, alimony and child support may be part of the financial picture. Child support is not taxable, but alimony is, and it's important to structure these payments in a way that benefits both you and your children. Rental income? If your home is larger than necessary, consider renting out a room or creating a rental space. Renting part of your home can provide extra income, but should be weighed against potential costs, zoning issues, and tax considerations. Savings for college? Saving for college is a daunting task for many parents, and for single parents, it can feel even more overwhelming. Even if you can only save a small amount, every bit adds up over time. Consider investment options like Series E or I U.S. savings bonds, which offer tax-free interest if used for educational costs. If you're below certain income thresholds, you may also qualify for other tax-advantaged savings accounts such as a coverall education savings account or take advantage of various tax credits that support educational costs. Planning for the future? Financial stability as a single parent requires not just day-to-day management, but a long-term vision. Begin by addressing immediate needs such as budgeting and securing adequate insurance, while also thinking about how to save for retirement and college. Balancing both immediate expenses and future savings is key to maintaining financial health. Lastly, avoid making your financial challenges a burden on your children. Educate them about budgeting, saving, and making choices, but don't overexpose them to the stresses you're experiencing. Ultimately, financial planning as a single parent is about managing your resources wisely while ensuring your children's needs are met without sacrificing your own well-being. If you're a single parent, comment on the challenges you're facing. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.